Let me ask you a simple question. Have you ever looked at your bank account and thought, okay, where is my money actually sitting right now? Like, is it in a safe, in a little box with your name on it, just waiting for you? Because if that's how you pictured it, you're normal. That's the truth most of us grew up seeing and believing. But now I'm going to tell you something that, the first time you hear it, almost sounds illegal. The money you call money in the bank isn't sitting anywhere. It's a promise, a number, a claim. And the banking system runs on hidden rules that almost nobody explains in simple language. Not because it's hard, but because once you understand it, you start seeing the power. First hidden rule: banks don't store money. They create claims. Let's break this into painfully simple pieces. When you deposit money into a bank, the bank does not take that money and put it in a little drawer with your name on it and keep it there until you come back. That's not how it works. A bank deposit is basically this: the bank owes you your money whenever you demand it. Your account balance is very real as a record. But it's not a pile of cash, it's a promise. Now here comes the twist. The bank can use the money you deposited to make loans, and when it makes a loan, it creates a new deposit somewhere else. So banking isn't just moving money around, it creates spendable claims. That's what allows the system to grow faster than the real economy, because credit can expand with a few lines on a ledger. And I'm not saying banks are evil. I'm saying the system is built in a way that most people never learn or don't want to learn. Your deposit is their funding source. Your trust is the fuel that keeps the system running. Second hidden rule: fractional reserves are a confidence business. You've probably heard phrases like fractional reserve banking. People talk about it everywhere like it's a math class. Let's explain it in plain language. Banks don't keep all the money. They keep only a portion ready. Because if everyone showed up on the same day and demanded all their money in cash, the bank would collapse. That's not a conspiracy. That's the basic design. The banking system survives because most people don't withdraw everything at the same time. That's why banks live on routine. More precisely, they live on habit. You look at a screen, you see a number in your account, and you accept it as real. So the bank's real product isn't money. Its real product is confidence. And confidence is fragile. That's why bank runs are always terrifying. Not because the bank suddenly became bad, but because the spell broke and the real truth surfaced. The moment people stop believing, the numbers stop working, and everything can start collapsing fast. Third hidden rule: the system punishes panic and rewards the first movers. Now let me show you the next dark scene. In a crisis, timing becomes more important than morality. If you get in early, you get out clean. If you get in late, you pay the price. It's the same in markets, and it's the same in banks, because when the system is under stress, access turns into a weapon. Who gets liquidity first? Who gets protected first? Who gets special terms? Who gets the phone call? That's not random. Every financial system has its own quiet hierarchy. And when things start breaking, that hierarchy shows itself. Everyday people usually learn this only when they're already trapped inside, and there's no easy way out. Fourth hidden rule: Banks don't lend savings. They lend their balance sheet. Let me explain one simple point. A bank balance sheet has two sides. What the bank owns: assets, loans, securities. What the bank owes: liabilities, your deposit. When a bank gives a loan, it does not take someone else's deposit and hand it to you. It creates a new deposit entry. That's why credit expansion can look like magic. But here's the darker side. If banks can expand credit in good times, they can also shrink it in bad times. They can tighten conditions whenever they want, raise requirements, and pull back. And when credit shrinks, people don't just get less money, they lose options. Businesses choke, households break. Layoffs begin, and everyone asks, why did the economy suddenly freeze? Because in modern systems, money is not mainly cash. Money is credit. And credit is permission. Fifth hidden rule: interest isn't just a price, it's control over time. Most people think interest is simply the cost of borrowing. That's how they approach it. But in a credit-based system, interest carries something deeper. Interest decides who can expand, who can survive, who gets crushed when the cycle turns. When rates are low, credit is cheap and growth looks easy. People take risks, companies expand, assets inflate. When rates rise in one moment, that whole world changes. Suddenly, the same debt becomes heavier. The same payment becomes painful. The same lifestyle becomes unstable. So now it's clear, interest is not just a number, it's a lever. A lever that shifts power across society without anyone voting. And if you've ever wondered why one rate announcement can shake the entire system, this is the reason. The system is built on borrowed time. Sixth hidden rule: central banks are the backstop and the signal. Now we're going deeper, and I can tell you're ready for it. In modern banking, commercial banks never truly live alone. They sit under a bigger umbrella, central banks. Central banks can provide liquidity. They can stabilize confidence. They can act as the lender of last resort. That sounds comforting, and sometimes it is. But let me explain the darker side. When the system knows it can be rescued, it can keep taking bigger risks. And the consequences don't always land on the same people who took the risk. That's called moral hazard. In simple language, it means this: if profits are private, but losses are shared, the system will push risk. And later, you'll start feeling it, as inflation, as taxes, as bailouts, or as lost purchasing power. Not always directly and not always openly, but the bill always arrives. It's unavoidable. Seventh hidden rule: banking isn't a building, it's a network. People imagine a bank as a building, branches, tellers, ATMs. But modern banking is a network of promises. The bank promises you access. You promise you won't panic. Borrowers promise to repay. Institutions promise liquidity. The state promises enforcement. That's why banking is also a political system, because it has enforcement behind it. Without enforcement, a deposit is just hope. With enforcement, a deposit becomes money, so the bank itself is not the center of power. The rules are the center, the ledgers are the center. Enforcement is the center. That's why this channel is called Coin Conspiracy. Because a conspiracy isn't always a meeting in a dark room. Sometimes it's just a system designed so well, you don't even realize what's happening. The darkest part, the system needs you calm. Here's the part that makes people uncomfortable. The banking system needs you to behave. It wants you to trust the screen, accept delays, follow the rules, keep your money parked, keep using credit. Because your calm keeps the system stable. It fuels the machine so it can keep moving. When people don't stay calm, the system doesn't negotiate. It reacts. It closes doors. It raises requirements. It slows withdrawals. It increases control. Not always in a dramatic way. Sometimes it's just friction. And friction is what control looks like in a modern economy. A simple model you can always remember. Let me give you a simple model you'll never forget. Banking is built on 3 things. First, trust. You believe the promise. Second, credit. Promises expand the economy. Third, backstops. Central banks and the state protect confidence. When trust is strong, credit expands. When trust breaks, credit contracts. When credit contracts, society feels pain. That's the cycle, and it keeps turning like a wheel. And once you see it, you stop being shocked by the news. Because most news is just noise. The real story is always the same. Where is trust moving? Where is credit tightening? Who gets liquidity first? Those 3 questions explain what many experts can't explain in 20 minutes. They don't want you asking this question. Now you know the hidden rules of banking. This isn't just a service. It's a power system built on promises and enforcement. And the darkest part is this. You can live your whole life inside it and never realize that what you call money is often permission. So I'll leave you with one question. If banking is built on trust, who decides what you're allowed to trust? Because that's where power really lives. This is Coin Conspiracy, and we expose hidden rules.